Guys, the most important part of this S&P 500 weekly technical analysis is that why the market movers, why the market manipulators have only 10 days, only 10 days. What is going to happen after 10 days? Why these the 10 days are so important, and why and how you should be ready for this. Guys, the key points of this S&P 500 weekly technical analysis are: number one, the recession, and this recession was further confirmed by the FOMC minutes of the meeting. We will analyze the FOMC minutes of the meeting. Then the bull trend. We will see how the technicals are aligned to this, the bull trend, and for how long the technical indicators are going to support this, the short-term bull trend. Remember, this is the short-term bull trend, not the long-term bull trend, short-term bull trend. Then we will analyze the CPI, the recent CPI data, and we will not only analyze the CPI of the USA, but we will also analyze the CPI of the Eurozone. Then we will talk about a potential reversal in the entire stock market, including the S&P 500 and the Dow Jones and all other indices. And guys, whatever we are going to discuss here, we are going to discuss this through the numbers, through the technicals, through the technical indicators, and we will do a thorough analysis. We are not going to speculate, and we never speculate. We always trust the numbers. That's it. Guys, just a little recap of what has happened this the previous week and how the entire stock market and the S&P 500 has moved, and based on that, what we can anticipate in the next week, what is going to happen. In the previous S&P 500 weekly technical analysis, we have discussed these the two scenarios, wherein the first scenario, the bullish scenario, was highly likely and the probability was more than 70%, 70 to 75%, that no matter what happens in the entire stock market, the stock market will move up, it will remain bullish. Now let me tell you that how exactly the S&P 500 moved Monday to Friday, every day as was predicted. Monday we have seen that initially upon open it tried to come down and then it gave a bullish reversal. Bullish reversal was up to 4109 and the low it made was 4072. And what we were expecting? We were expecting first a downward movement up to 4089 or 4080. If there comes a little more bearish movement, then maximum up to 4065. And then what will happen? Then there will be a bullish reversal. Bullish reversal to what? Bullish reversal to 4100 to 4110. And what we have seen? The maximum was up to 4109. It failed to breach the 4110. So the movement was as was expected and predicted on Monday. Now what you can see on Tuesday, a sideways movement, nothing much. Immediately upon open it came down, it retested 4100. And at the same time the primes means the tech stocks, Apple, Amazon, Microsoft, they were already down by 2% to 3%. This means that that's it. No more fall and the S&P 500 will survive and will hold above 4100. This means that now the SP 500 either moves sideways, or if there comes a reversal in the primes, then a bullish reversal in the S&P 500 too. And what we can see, it came down, hold, it gave a bullish reversal, again came down. For the entire movement, it was sideways or bullish, that's it, nothing else. Now what we have seen on Wednesday, a heavy bearish candle. The high of the candle was 4134 and the low of the candle was 4086. We knew that the movement will be in between 4100, 4095 and 4133 by 2 p.m. Eastern Time US. And any breach of these respective levels will push the SP 500 in that particular direction towards 4075 or 4155. We have seen that it tried to move up 4134. We were expecting 4133. Done. Then a downward movement we were expecting maximum up to 4075 and not beyond 4075. What you have seen, 4086. On Thursday the open was tricky and immediately upon open it moved up. And initially we were concerned about the closing of the 4-hourly candle, and that is why very well in advance I have mentioned to my YouTube community members that the 4-hourly candle must close above 4125 so that we can expect a movement towards 4150. If it fails to close above 4125, in that case it will come down. And after the closing above 4125, the stock market, the S&P 500, it was free to move, it was free to go bullish. Now the only barrier was 4133. it was supposed to breach 4133 so that it can move towards 4155. So in the second half, now the picture was clear. Now it was very much clear that no matter what happens in the entire stock market, in the S&P 500, it will remain in between 4110 and 4155. There will not be any heavy fall, and even the bullish movement will be restricted up to 4155. We can see that on Thursday it made a high of 4150 and a low of 4100. Now what was there on Friday, yesterday? Initially upon open, it moved up. It moved up to fulfill the obligation which was long due. What was the obligation? The obligation was to test the 4150, 4160 to hit and test these levels. Immediately upon open, it moved up, it hit, it failed, it came down, then it sustained and it closed around this level. And what we knew before the open of the S&P 500, that the S&P 500 will finally try to hit and breach the 415060, which was long due. And if it fails to sustain above 4160, in that case, it will have to take a little break and the SP 500 can come down towards 4133, 4121, and then after sustaining, it will try again. And no matter what, as long as S&P 500 is holding or sustaining above 4100, 4110, it will remain bullish. It moved as was expected. We have missed 3 points here and 8 points here. That's it. So overall, it was 90% as was expected. What we have missed, the 3 points here, 8 points here, and also the closing on Wednesday, it was a false signal because of which the open was at 4100. This was the only thing, this 1, 2 and 3. So overall, there was a fluctuation of plus minus 5%. So we can say that in the previous week, S&P 500 has moved as was expected and predicted around 90%. Once again, many thanks to my critics, whose criticism actually helped me to stay on course and also helped me to improve my technical analysis. So yes, I have missed this part, only 2 to 3 candles, else the S&P 500, it moved as was expected and predicted on the daily basis. Now guys, we are going to discuss the agenda of this S&P 500 weekly technical analysis, which is for the week of April 17th, 2023, that is from April 17th Monday through April 21st Friday. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. We will see that what was the change, what exactly has happened on the weekly chart and why it is concerning, and why and how it can actually put a break on the bullish movement, and why it can be responsible for the reversal. So weekly chart means the big chart, the big picture, the Hawkeye view. Okay. Then we will discuss in the second point of the agenda the S&P 500 support and resistance levels. Okay. So for example, last week I mentioned that if everything goes well as per the technical indicators, then we are expecting the movement between 4100/4155, or in an extended case from 4065 to 4155. And any breach to these levels will push the S&P 500 towards the respective levels in the bear and the bull side. However, this is highly likely that the S&P 500 will remain in between the respective levels, right? Similarly, I will give you the support and resistance levels for the coming week. Then the third point of the agenda is the economic factors. Recently, we have seen that the CPI data was published for the US. And also yesterday it was published for the European Union, for the Eurozone. Other than that, the earnings of the banks. Yesterday the banks have posted some good earnings, and the United Healthcare. Then we will discuss the FOMC minutes, what the Federal Open Market Committee members have actually discussed, and why some of them were ready for the 50 BPS rate hike. 50 BPS. And if you have noticed that on 22nd of March, the Federal Reserve has raised the interest rates by 25 BPS, not by 50 BPS, but some of the committee members, they were in favor of raising the interest rates by 50 BPS. Okay, so for those who are speculating that the Feds are going to pause the interest rates, so you must remember that some of the committee members, they were even planning for the 50 BPS, and now you are speculating that the Feds are going to pause the interest rates. Okay, so do not speculate. The stock market, it is not about the speculation. Speculation is bad. Okay. So we will decode, okay, this is the FOMC minutes and why the committee members have said that we are expecting a mild recession. They have mentioned a mild recession. Okay, so we will talk about the recession, then the CPI, that why even though the CPI number, the inflation, okay, it was good, so it has declined from 6% to 5%, but the core inflation in the US and also in the European Union or in the Eurozone, it was still holding the core inflation. Okay, so we will discuss all of these factors and then you will come to know that what actually can happen, okay, in the coming time and why we are expecting a recession. Okay, what will be the duration of the recession. And then comes the fourth point of the agenda of this S&P 500 weekly technical analysis, and here I will give you the S&P 500 technical analysis on the daily chart. Remember, this was the weekly chart. Weekly chart means the hawk eye view, means the big picture. Daily chart means that what is going to happen in 1 week, 2 weeks, 3 weeks, and what the technical indicators are saying. Okay, for now the technical indicators are short term bullish. Okay, we will see that what can actually affect these are technical indicators and what can actually force them to change the direction, and okay, all of these are factors. Then finally, in the fifth point of the agenda of this S&P 500 weekly technical analysis, we will talk about the probable movement of the S&P 500 from April 17th, which is Monday, through April 21st, which is Friday. So I will tell you that how exactly the S&P 500 is going to move, where it is going to find the resistance, where it is going to see a reversal, then where it will hold, and then where it will again retry, and what are the conditions for this the downward movement and this the upward movement, etc. So I will explain you each and everything. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. And if you are looking for these the daily updates and the daily analysis of the S&P 500 from Monday through Friday, as well as up to 50 opportunities in the prime stocks every month, then you can join my YouTube community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to begin with the S&P 500 technical analysis on the weekly chart. So guys, we are here and this is the weekly chart of the S&P 500. Let me mention here weekly chart, W as in weekly chart. Weekly chart means that the one candle represents 1 week. Not 1 day or 1 hour, one candle means 1 week. Now let's first analyze the candle itself. If you look into the candle is good, and the candle is a good bullish candle, or we can say that the solid bullish candle. Okay, and also the body of this candle, this bullish candle, has engulfed the body of the previous weekly candle. Okay, this means that there are bullish sentiments in the stock market. Simple. Okay. Stock market means in the Dow Jones, in the S&P 500, okay, and in all other indices, right? Now, if everything is good here, then is there any problem? Yes, there is a problem. The problem is that this candle actually tried to breach and sustain our 4155 but failed. Okay, that is the only problem. Otherwise, this candle is good, is supporting the short-term bullish movement, okay, etc. Now let's do the technical analysis on this, the weekly chart of the S&P 500. So at first the Bollinger Bands, this is the upper band of the Bollinger Band, this is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands, right? Now comes the moving averages, clear fan out in the moving averages. Earlier there was a slip. I mentioned this thing that because there was a slip, this means that there will be the short-term bullish trend. Okay, clear fan out. Secondly, the S&P 500 has closed above these the moving averages, EMAs. Okay, this means that the S&P 500 is clearly bullish through the exponential moving average or the EMAs, right? Then comes the Ichimoku cloud, and that's the only problem. So for now, the S&P 500 failed to clear the Ichimoku cloud. It has closed inside the Ichimoku cloud. Okay. This means that as of now, the Ichimoku cloud is going to act as a neutral, or we can say that the S&P 500 is neutral through the Ichimoku cloud. Okay. Now comes some other technical indicators. Some other technical indicators means at first this the MACD. If you look into the MACD, then the MACD is clearly bullish because the MACD is more than the signal. It is clearly bullish. Okay, it is indicating that the S&P 500 is bullish through the MACD. MACD means moving average convergence divergence. Then comes the stochastic RSI. If you look into the stochastic RSI, the K channel is more than the D channel, K channel is more than the D channel. This means that the stochastic RSI is bullish, or the S&P 500 is bullish through the stochastic RSI. Then all other technical indicators are normal and good. And so for now, what we have seen is that the S&P 500 on the weekly chart is bullish through the Bollinger Bands. S&P 500 on the weekly chart is bullish through the moving averages. S&P 500 on the weekly chart is bullish through the MACD. S&P 500 on the weekly chart is bullish through the stochastic RSI. S&P 500 is neutral through the Ichimoku cloud on the weekly chart. So what it indicates? This indicates that the S&P 500 is like 80% bullish on the weekly chart. 80%, okay, not absolute bullish or not 90%, it is 80% bullish. The reason is that it failed to clear the weekly chart. That is the reason, right? So what does this the 80% bullish indicates? This means that for now the S&P 500 is in the short term bullish trend, and it is expected to continue the short term bullish trend as long as it is able to hold and sustain above 4155. Means in the next week we are looking for a closing above 4155. If that does not happen, in that case a reversal. Now I mentioned this thing in the previous S&P 500 weekly technical analysis, but still let me clear once again that why the 4155 is so much important, and why the S&P 500 was under technical obligation to hit 4150/4160 and to the median, okay, this is the 4155. So the first thing is that it was the upper band of the Ichimoku cloud, and the second and the primary reason, or the most important reason, was we can see that through the monthly chart or the quarterly chart. Now this is the quarterly chart of the S&P 500, right? Now when we use the Fibonacci retracement, then what you are going to notice? You will notice that the S&P 500, it is under technical obligation that whenever it moves up, whenever it breaches the 4000 level, and not just breaches, whenever it sustains above the 4000 level on the quarterly basis or on the monthly basis. Now you can clearly see that this 4155 is the 50% of the Fibonacci retracement level. Fib retracement level 50%. And if you understand the Fibonacci retracement level, it is very, very important, okay, and it works during the retracements. 50% and the 61.8% are the critical levels, and generally we see the reversals from these levels, which means that as of now we can anticipate that it came down, moved up and came down, or it came down, moved up and then hit and failed and breached whatever it was there, and again, okay, it came down. So this is how the Fibonacci retracement, okay, it works. So that is why the S&P 500 must clear the 4155 on the monthly and the quarterly basis. But before it can do that, it must clear this on the weekly basis, so that it can move up further towards 4185 to 4291. But if it fails to clear the 4155 on the weekly basis itself, in that case we can anticipate that no, it is not expected to move towards the 61.8% of the Fibonacci retracement level. Rather, it will form a lower high here around 4155, 4160, etc. Okay, plus minus, okay, plus minus a few points, and then it will resume its, okay, this the bearish trend, and it will enter into the recession. So guys, now I hope this thing is clear, that why the 4155 is important, why it was there in the picture, why the S&P 500 was under technical obligation to hit and to respect to this level, okay, and why it has actually failed on, and why the S&P 500 failed after breaching and hitting around 4160, it came down, etc. Okay. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. And also, if you want to join my YouTube community to get the daily updates and the daily analysis of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. Now guys, let's move on to this, the second point of the agenda of this S&P 500 weekly technical analysis, and let's discuss the support and resistance levels for this the S&P 500. Now guys, we are going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here we are going to discuss the support and resistance levels for the S&P 500. For those who are new to my channel, let me tell you that whatever support and resistance levels I am going to tell you, these support and resistance levels are what I have calculated myself, and these are not the standard pivot levels or any other support and resistance levels, right? And that is why you will see that the accuracy of these support and resistance levels is very high. Now at first what we can see that the S&P 500 on Friday, it came down, then there was a reversal. Okay, this was as we have expected on Friday, a reversal, and closed at 4137. It has breached the previous high. Okay, this means that as of now the S&P 500 is still in the short term bull trend. What does that mean? This means that as of now, once again the S&P 500 can try to hit and breach and sustain above the 4155 or 4160. See, I have mentioned 4155. Okay, however, it is from 4150 to 4160. Okay, so 4155 is the median. So once the S&P 500 is able to hold and sustain our 4160, then it can move towards the 4185. So the next resistance will be 4185. After 4185, there is a kind of vacuum until 4225 or 4227. Okay, there is the vacuum. After 4227, then we have 4260, 4265. Okay, that is not that strong. But the prime, this the resistance, okay, a very heavy resistance is the 4291. Okay, and also we have the 61.8% of the Fibonacci retracement level says 4305 or 10. Okay, it is there. So for those who want to know that to what extent or to what levels, okay, the S&P 500 can move before it can actually enter into the recession, before it can actually give up. So the point is the 4305 and 4291. Okay, this is the last point. This is the last and the final point. Okay, so this is where the S&P 500, or this is at max the S&P 500 can move up to, and then it will give up. Okay, as of now there are no indications, or there are no conditions, and even the economic data or even the technical indicators are not supporting, okay, any movement beyond, okay, these the levels 4305, 4291. Okay, because beyond these levels, okay, it will then resume its long term bullish trend, and then it will form new there's the all time high, and the recession, okay, it will not be in the picture in that case. Okay, so as of now 4291, 4305 is the maximum. Okay, now okay, these are the resistances. The most important resistance is at first, okay, it is the 4160 and the 4185. Okay, why this the 4185? If you remember that last time, this the 4185 was the resistance level where the S&P 500 moved, failed, and then it gave up. Okay, so similarly this time also it is expected to struggle around 4185, and then we will have to see whether it is going to breach and not the breach, okay, but close, whether it is able to, or whether it is going to close. If it is able to close above two candles in order to make sure that this is not this is not a trap, or that this is not a false signal, okay, then it can move further towards 4225, 4227, etc. Okay, and any failure or means struggle, but a failure means intraday we can see that it has breached, but again it closed below 4185. Okay, in that case 4185, 4190, in that case, okay, again it will be considered as a failure and it can backfire. Okay, simple. Now comes the support levels. Support levels as of now 4110 and 4100, 4110 and 4100. These are the two very strong support levels, and as long as S&P 500 is holding above these the support levels, it will remain, or is expected to remain, in the short term bull trend. Okay, now here I want to tell you one more thing about the Dow Jones. Remember, the Dow Jones is actually driving the entire stock market. Okay, so it's not just about the S&P 500 but also about the Dow Jones. Now this is the chart of Dow Jones. Okay, so the Dow Jones says that through the Dow Jones, okay, what we know is that as long as Dow Jones is holding above 33,585. 33,585. The entire stock market will remain in the short term bull trend. As simple as that. But now, as of now, we can clearly see that the Dow Jones on Monday itself has breached this the mark of 33,585 and it closed at 33,586. Okay, just by $1. Okay, and this $1 has simply changed the sentiments and the movement and the technicals in the entire stock market, and now the entire stock market is in the short term bull trend. Okay, so 33,585 in the Dow Jones. As long as Dow Jones is holding above 33,585, then we will say that the entire stock market is in the short term bull trend. Okay, now there is one more condition, that let's say that the Dow Jones, okay, it moves up, entire stock market, okay, it moves up. Now at some point of time, okay, it gives up. Then this does not mean that the S&P 500 and the Dow Jones and the entire stock market is still in the short term bull trend. No. Okay, this will say that now that the bull trend is over, now it is coming down, and whenever it comes down, then 33,585 will provide very good support, very heavy support. Okay, so these two things are different. Okay, that the 33,585, as long as it is trading around or near 33,585, okay, 500 points, 400 points, okay, it will be seen that, okay, that 33,585 is the mark. Okay, or is the differentiator between the bulls and the bears. Okay, but once it moves up, then there will be some other mark, right? So whatever is happening in the US stock market as of now, okay, the Dow Jones is driving the entire US stock market, including the S&P 500, right? So when we are looking into the S&P 500, at the same time we must also look into the Dow Jones in order to make sure that there are no false signals and that there is no trap. And the same can be seen on Wednesday, that Wednesday the S&P 500, it closed at 4091 below the mark, but at the same time, okay, on Wednesday the Dow Jones was able to sustain and close above 33,585. That was the reason this was a false signal in the S&P 500 on Wednesday. Anyways, we were talking about the support levels. So for now, 4100 and 4110 is going to act as a very strong support zone, you can say zone, not the level, zone. Okay, for the S&P 500, any breach and any closing below these the levels, and at the same time the Dow Jones must also close below these the levels. Or if the Dow Jones is closing around like there is a difference like 300 points or something, 200 300 points, okay, in the 33,585 and the closing of the Dow Jones, in that case the S&P 500, okay, it will further come down. But the real fall or the heavy fall will begin when the Dow Jones gives up the 33,585. Okay, now the next support level will be 4065, very good support, okay, very heavy support. Next, the differentiator. Now the differentiator between the bulls and the bears at first is the 4,100 and 4110. Then the next differentiator is the 4035 zone. The zone of 4035 is the next differentiator between the bulls and the bears, and we have seen that whenever the S&P 500, okay, it goes below the zone of 4035, then it enters into the short term or the long term bear trend. Okay, as of now this is the 4035. Then comes the next support level at 4000 or 3991. This is the 3991. Okay, then we have 3965 and 3937. However, in the next week like are no reasons, and the entire US stock market has no reasons to come down or to give this kind of heavy fall like 3-4%. Okay, this kind of heavy fall. See, a little fall, 1%, 1.5%, 0.5%, okay, that is fine, that is acceptable, not a problem. Okay, but a very heavy fall, 4%, 5%, 6%, okay, in the next week, as of now there are no earnings, okay, earnings from the giants, okay, that is not scheduled. Other than that, no financial data is there, okay, in the next week. Okay, means as such there is nothing that can actually impact the bullish movement of the S&P 500, okay, until and unless for some unknown reason, okay, there comes heavy selling, and that heavy selling actually breaks the strong support at 4100, and then after some time it breaks the 33585. S&P 500 and the Dow Jones and the entire US stock market is in the short term bullish trend, and it will remain in the short term bullish trend. So as of now, we can say that even in this the worst case scenario, when the S&P 500 it comes down, then the 4035 will give the necessary support to the entire stock market. Other than the 4035 zone, then comes the Ichimoku cloud. So as of now, around 4035 or 4000, it will come and hold. This is where it is expected to hold. A breach of these the levels will then push the S&P 500 and the Dow Jones and the entire US stock market in the bearish trend or in the bearish side. Now guys, there is one more important thing that I want to share, and this is regarding how you can join my YouTube community in order to get the daily updates and analysis of the S&P 500 from Monday through Friday, each and everything. And last week we have seen that the movement was as expected, and 90% we have achieved and it's not just about this the daily updates and analysis of the S&P 500, but also about 40 to 50 opportunities in the premium stocks every month. So guys, in order to join my YouTube community, you need to visit my channel page. I have given the link in the description of the video and also in the comment section. And you will see that there is the join button, JOIN join button. And other than that, you can also access the join button directly from this video itself. You will see the join button there just below the title of this video. Once you click on the join button, then a pop-up will open. In this pop-up, you will notice that there are two options: daily S&P 500 updates and the updates and opportunities. Daily S&P 500 updates means that you will get the daily updates and analysis of the S&P 500 from Monday through Friday, each and every day. And the updates and opportunities means that you will get the daily S&P 500 updates and analysis from Monday through Friday, as well as 40 to 50 opportunities in the prime stocks, premium stocks every month. And if you notice that many people have joined my YouTube community for last many months or almost about 1 year, and they are getting these daily updates and analysis from Monday through Friday, each and everything from Monday through Friday, as well as 40 to 50 opportunities every month in the prime stocks, in the premium stocks. So whenever you want to join my YouTube community, you are welcome. And guys, there is one more thing, that once you have joined my YouTube community, then you need to visit my channel page, and on this my channel page you will find the community tab. Whatever updates I post, these updates are there in the community tab itself. And if you are using the YouTube through a mobile phone, iPhone or any Android phone, then you can access the community updates or these are daily updates through this YouTube mobile app. Now guys, we are going to discuss the third point of the agenda of this S&P 500 weekly technical analysis. And in this, the third point of the agenda, we are going to discuss the economic factors, the CPI, the recession, the FOMC minutes, and why some of the committee members, they were in favor of the 50 BPS rate hike. So at first, we need to understand that what was there in the minutes of the meeting of the Federal Open Market Committee. So this was my fourth update to my YouTube committee members on April 12th, when the FOMC minutes were published. Now, the committee members agreed to raise the fund rates to 25 BPS. This is what we know, that on 22nd of March, Federal Reserve Committee, they have raised the interest rates by 25 BPS. Because the inflation is not yet to the levels, levels means the 2%, and Federal Reserve, the committee is expecting that the inflation will be back to 2%, around 2% in 2025 after 2 years. As of now, we are seeing that the inflation is around 5, or 5.1 something. But it will take 2 years for the inflation to drop from 5% to 2%. Also, some members were also in favor of raising the rates by 50 BPS. But because of the tighter conditions in the banking system, the failure of the banks, Silicon Valley Bank, First Republic Bank, then the credit issues, and recently, some news, from the Deutsche Bank. So they opted for this 25 BPS rate hike. Otherwise, they wanted to go aggressive like 50 BPS or so that the 2% target of this inflation can be achieved by the end of 2024. Okay, means after 1 year or after 1.5 years. But because of the tighter conditions in the financial market, okay, in this the banking, okay, sector, okay, they opted for the 25 bps, and rather, so they opted for a sequential rate hike, like the small rate hikes like 25 bps, 25 bps. Okay, then the committee agreed that it is too early to confirm that the inflation is coming down and everything is going to back to the normal, which is why the rate hike in the March and subsequent rate hikes will be okay and acceptable. This means that we are expecting, okay, another rate hike on May 2nd, because the FOMC, the Federal Open Market Committee, will meet on May 1st and May 2nd. And on May 2nd, the next round of this, the rate hike, okay, it will be announced. This is based on, see, I'm not speculating, but this is based on the minutes of the meeting, right? Then the data suggested that the rate hike in the month of May will reach to its limit, and thereafter the conditions will soften and further rate hikes won't be necessary. This means that once again we are expecting a rate hike in the month of May, but some committee members, they were saying that that after the rate hike of May, the conditions may soften, and further rate hikes might not be necessary or might not be needed. So the economic projections, okay, other than that, the other data, the economic projections said that the rate hikes will be there until the end of this year 2023. Okay, so although some of the committee members, they were saying that after the rate hike of May 2023, okay, no more rate hikes might be, or any more rate hikes, okay, might not be needing for the rest of the month. But the economic projections data said that yes, okay, a few more rate hikes until the end of 2023 will be there, and thereafter only in 2024 or by the end of 2023 there will be a pause in the rate hikes, or the rate hikes, okay, this will be stopped. But the second point is the rate cuts. No, there will not be any rate cuts. Okay, now by mid or end of 2023, the full effect of these aggressive rate hikes will be visible when the inflation is expected to come around 3.5%. So Feds are expecting that the inflation will be in the range of 3%, 3 to 4%, or 3% to 3.5% in 2024, and then in 2025 the inflation will be coming down to around 2% or 2.25%. Okay, so as of now it is 5% approximately, and from 5% to 2.25% or 2% means a decline of 3% will take approximately 2 years. Okay, so this is what was there in the minutes of the meeting. So overall, everyone believed that it is too early to confirm anything and to celebrate just because there were initial signs of seeing the inflation cooling down, or the inflation coming down. Okay, until and unless there is substantial evidence that the inflation has cooled down to the levels it was expected, and as per planned projections, Feds don't want to rest or they don't want to celebrate. Okay, this means that we can expect another rate hike in the month of May, on May 2nd, actually May 2nd, okay, when there will be the press conference of the Fed chairman, when the FOMC will meet, and that time, okay, we can expect 25 bps only. Okay, but this time remember that now even 25 bps is catastrophic to the market, to the financial market, especially to the banking sector. Okay, and we can expect that the Feds will pause the rate hikes after Q3 or by the end of this year. Okay, once there is concrete evidence that the inflation is coming down, and will not move up, will not give any more bullish reversal. So for now, the impact on the US stock market as well as the global stock market will be mixed, and because it is now almost clear that the Feds are going to raise the interest rates in the month of May as per the minutes of the meeting, okay, after 2 or 3 weeks, which means that the market movers or the market manipulators, they can opt for these are following options. So now why I have mentioned that market manipulators or the market movers have only 10 days, that they can simply push the stock market, the US stock market up, and it will also get support from the technicals which are already aligned bullish, right? So thus no one will question this move, that why the stock market is moving up, because the technicals are there. Okay, and then there is no such bad news. Okay, no such bad news, although there is no such good news, but there is also no such bad news. Okay, then the technicals are there, so this means that no one will question this move. Once the S&P 500 is in the range of 4 to XX, then at an appropriate time they can plan to dump. Okay, as we are expecting a recession as early as May, June this year, or the mid, okay, means May, June, July, okay, this year, which will be triggered by the rate hike, highly likely through the rate hike. So rate hike means what rate hike? This, the May, this is the rate hike of the month of May. This option is highly likely as it is supported by the short-term bullish technicals. And now also there is this the earning season. Okay, so all of these are factors, non-technical factors are also supporting the bullish trend, right? The second option is that they can give up and push the US stock market in the bearish side. But this doesn't make any sense because now the technicals are supportive, means the technical indicators are supporting the bullish trend, short-term bullish trend, and they have manipulated the stock market, the entire US stock market on 29th, 30th, 31st and 1st. Okay. This means that pushing it back into the bearish side won't serve any purpose, right? This means that this option is less likely. So what is highly likely? A bullish trend, a continuation of the bullish trend. So now through the FOMC, it was clear that the committee members, okay, some of the committee members, okay, they were agreed for the 50 BPS rate hike, but because of the tighter condition in the financial market, this idea was dropped, rather 25 BPS, okay, it was opted. Secondly, all of the Federal Reserve Committee members, they agree that for now, it is not the time to celebrate, okay, too early, or to give some relief to the economy or to the entire stock market, okay, because as of now, even if you look into the inflation, okay, it is trading at the absolute critical levels, and I'm surprised at why it is not giving a bullish reversal. But now the good thing is that wherever it gives a bullish reversal next month or so, there will be a very heavy bullish reversal, right? So, so the Federal Open Committee members, they have agreed that yes, they can still raise the interest rates, okay, in the month of May. So there are like 80% or 90% chances, probability, 80% to 90% probability that yes, there will be a rate hike of 25 BPS in the month of May. As per the, see, this probability is as per the Federal Open Market Committee minutes of the meeting. Now let's talk about the CPI, the inflation data, okay. So on the same day, okay, so on the same day, the CPI data, it was published, and the year-on-year inflation has further cooled down from 6% to 5%, okay, a decrease or a decline of more than 60%, more than 16%. And so now this news is a point of relief to all, and the stock market, the US stock market, has the reasons to go bullish, okay, and to remain in the short-term bullish trend. But this is not the entire picture. You cannot say, okay, that yes, and now everyone is going to celebrate. So what, so why this was not the entire picture? Because the core CPI, the core inflation, year on year has increased by 0.1% this month. And that is actually the real problem why we have not seen a very heavy jump or very heavy bullish movement in the US stock market and in the SP 500 and the Dow Jones and other indices, right? So last month it was 5.5%, okay, and this month it was 5.6%, and this is 0.1% more than what the Wall Street was anticipating, right? So this is not good for the US stock market, as it indicates that the inflation in all of the sectors, excluding food and energy, is still high and holding, okay. And if you remember, or if you know, or if you understand the CPI, okay, and there's a Federal Reserve, okay, how they calculate and how they think. So as per the comments of the Federal Reserve Chairman, okay, the Federal Open Market Committee, okay, they always, or they mostly, or they heavily depends, or they heavily consider this the core CPI rather than, okay, this the CPI which includes the food and the energy. They consider the core CPI, and because the core CPI is still holding, means the inflation is holding. This means that yes, that is the reason, that is why the Federal Open Market Committee members, they do not want to celebrate too early. They do not want to, you know, they do not want to speculate that the inflation will come down now. That is why they are going for the 25 BPS rate hike, and that is why some of the members were even ready for the 50 BPS rate hike, right? Now, the other thing was that the Federal Open Market Committee members have anticipated a mild recession. Now, this was the economic outlook, okay, and this is actually the Federal Open Market Committee minutes of the meeting. Okay. And if you want to access, then you can access it directly, okay, through the Federal Reserve website. So now okay, this is the economic outlook. And it says that given their assessment of the potential economic effects of the recent banking sector developments, the STEP's projection at the time of the March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years. Clear? So what different have I said in my previous S&P 500 weekly technical analysis? Okay, in many of these the technical analysis, nothing. Okay, but even though I have seen that most of the people, okay, they are trusting these market movers who are saying that the recession will not be there or any kind of this thing will not be there, and the recession was over in 2022. Okay, so this is what they are believing, and this is so not actually believing, but this is what they are speculating, and this is what the market manipulators and the market movers they are feeding through all of the channels. But now you can clearly see that the Federal Reserve itself has mentioned this thing, that a mild recession is starting later this year with a recovery over the subsequent 2 years. So the question is that whether you are going to trust these the market manipulators or the Federal Reserve that actually drives the entire economy and the entire stock market. So I leave it up to you. And also I will welcome your comments on this part, on this the recession part, that what do you think that whether the Federal Reserve, okay, whether they are right about this the mild recession, or you think that no, that they are not right and rather the recession was over in 2022 and then the entire stock market is going to move up. Let me know in the comments. But as of now, okay, even if we just forget about everything, then the FOMC, the projections, okay, these economic projections of from the Federal Reserve says, as of now, the inflation is around 5%, 5.1%. This will decrease to 3.5% approximately in 2024, and then it will further decrease to 2% or 2.25% in 2025. And that is again, okay, it further confirms that whatever the Federal Reserve okay, this the staff, okay, through this economic outlook has mentioned, that there will be a recovery over the subsequent 2 years, means a mild recession then a recovery of two years, right? So this is as per their economic this is the projection, okay, and as per their data. So once again, let me know in the comments what you actually think about this. So guys, once again, if you have not yet subscribed to this channel, then please subscribe to this channel and click on the bell notification icon. And if you are looking for these the daily updates and the daily analysis of the S&P 500, then I have given the link in the description of the video and also in the comment section. Now guys, let's move on to this the fourth point of the agenda of this S&P 500 weekly technical analysis, and that is the S&P 500 technical analysis on the daily chart. Now guys, we are here and this is the fourth point of the agenda of this S&P 500 weekly technical analysis, and here I will do the S&P 500 technical analysis on the daily chart. This is the daily chart. Let me write it down. Daily chart. D as in daily chart. Okay. First of all, let us discuss the candle. Okay, the candle. So this the candle is okay, it looks like a dozy candle. In actual, okay, it is not. Okay, it is more like a spindle. It is more like a spindle. Okay, more like a spindle. Okay, generally a spindle is a sign or is an indication of a reversal. If the spindle is formed, okay, in the bullish the movement, okay, in the bullish direction, in that case there comes a bearish reversal. If it is formed, okay, in this the bearish direction, in that case there comes a bullish reversal. Okay, as of now this spindle, okay, it is formed in this the bullish direction and is indicating, okay, a reversal. But the question is what kind of reversal? Okay, a bearish reversal, an intraday bearish reversal, not a heavy bearish reversal. This is not indicating a bearish reversal in the entire stock market from bulls to bears. Okay, no, this is not the entire picture. Okay, some of the part is there, but this is not the entire picture. The candle is there. Okay, now so now there is another point here. The other point is that the candle has not formed at the top, okay, where we can actually say that yes, now there is an absolute reversal. Okay, that is the next point. Okay, or not next point, but that is another point that you must consider, that the candle has not formed at the top, right? because the candle has formed in the succession, okay, or in the continuous movement. Therefore, the candle is indicating a reversal. If there will be any reversal, then it will be an intraday reversal, okay, a little reversal, maximum up to 4100 or 4110, okay, that's it, but not even, okay, to these the levels. There will be, some other levels, and then, okay, and then there will be this the continuation of this the trend, okay, the short term bullish trend. Now let's see what the technical indicators are saying. The technical indicators, first comes the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 is trading in between the upper band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands, right? Then comes the moving averages, clear fan out in the moving averages, and the S&P 500 was able to close above all of the moving averages. This means that the S&P 500 is bullish through the moving averages or through the exponential moving average, EMA, okay. Then comes the Ichimoku cloud. Because the S&P 500 is trading above the Ichimoku cloud and has closed above the Ichimoku cloud, this means that the S&P 500 is bullish through the Ichimoku cloud on the daily chart. Now let's see what other technical indicators are saying. First comes the MACD. MACD is more than the signal. This means that the S&P 500 is bullish through the MACD. Now if you look into the stochastic RSI K channel is more than the D channel. K channel is more than the D channel. This means that the S&P 500 is bullish through the stochastic RSI on the daily chart, right? And also you can see this, okay, there's the there's the messy movement, okay, means messy kind of movement in the stochastic RSI, okay. It was fluctuating heavily because of this, the up down, okay, and so. However, all other technical indicators were bullish. So we knew that still the short term bullish trend stands and it is there and it will be there. So as of now, what we can see is that the S&P 500 is bullish through all of the technical indicators. This means that the S&P 500 is absolute bullish through all of the technical indicators. And as of now, there is no point of concern about saturation or any other thing. This means that the S&P 500 is in the short-term bull trend. Secondly, we have seen that on the weekly chart, the S&P 500 is still in the like 80% bullish. This means that the S&P 500 is still in the short-term bullish trend. It will remain in the short-term bullish trend until and unless, okay, a few conditions are seen in the entire stock market, in the entire US stock market, right? Now guys, just for your information that I've recently launched my website and the name is the tradingsp500.com. And if you see, okay, there are these services that I offer, then the technical analysis, then we have these the blogs, and the services that I offer is the daily SP500 analysis updates and opportunities through YouTube, then S&P 500 knowledge transfer program, and through this the S&P 500 knowledge transfer program I teach the movement, hacks, strategies, trend analysis, manipulation, technicals, predictions, support and resistance levels, and much more. And the other service that I offer is the 30% returns in 1 year. So I give 30% returns in 1 year and I take full responsibility of the profits and losses. On an average, we are able to get the 30% returns in 4 to 6 months. But still the 1 year is good. If there comes any fluctuation, in that case we need to wait for some time. But we try to complete this, the 30% returns as soon as we can. Okay, so the minimum, okay, it takes like 2 to 3 months and on an average 6 months, 4 to 6 months or so. So if you want to opt for any of these services, then I have given the link. Then I have given the link to my website in the description of the video and also in the comment section. You can visit and I've given my email address and the terms and conditions are there. Now guys, we are going to discuss the fifth and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 from Monday through Friday. And let's see what is going to happen in the S&P 500 in the week of April 17th. From April 17th, that is Monday, through April 21st, which is Friday. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. So guys, a few things, okay, that you must consider and you must remember. Number one, In the next week, okay, some of these the big companies are going to post the earnings, but as of now, no noticeable giants. Okay, Tesla, I guess Tesla is going to post the earnings on Thursday, Wednesday or Thursday. Okay, but again, the noticeable giants, when I say, I mean Apple, Amazon, Microsoft, Home Depot, okay, CRM, Nvidia, okay, etc. I mean, these are the prime stocks which actually drives the S&P 500 and the Dow Jones. Okay, for example, the UNH is 10%, more than 10% in the Dow Jones. Okay, this means that whatever happens in the United Healthcare, it impacts heavily the movement of the Dow Jones. And yesterday, if you see that the United Healthcare, it came down, and that was the reason that the Dow Jones, it was forced or it was compelled to give a bearish movement. Okay, but then the United Healthcare, okay, it held very well, and then okay, so did the Dow Jones, and so did the entire US stock market and the S&P 500, right? So next week, okay, as of now, okay, no such noticeable giant is going to post the earnings. Okay, which is good for the bulls. Number two, as such, next week, no specific or no big economic data is scheduled to be published. Okay, this means that both of these, the two conditions are giving an opportunity. Okay, sorry, these two things. Number three was the technical indicators are aligned bullish. Technical indicators are supporting the short-term bullish trend. This means that these three factors are saying, as of now, the entire US stock market has no reasons to give up or to give up heavily. See, a little bearish movement, 1%, 1.5%, 2%, that is fine, not a problem. Okay, but any big movement or any big this the bearish movement, okay, as of now, okay, that is not there in the picture, neither through the technicals nor through any economic data, okay, or anything else, right? There will be some speculations, okay, some sentiments or so, okay, but you need to stick to the technicals and the economic data. That's it. Okay, now the other factor is that now there is a kind of vacuum, we can say, in the next week, okay, for these 5 days, and then thereafter the next week will be where, yes, where some economic data and also the giants will post the earnings. Okay, then that can change the picture, but as of now, this week, the entire US stock market has the valid reasons to go bullish in the coming week, which means the S&P 500, Dow Jones, okay, everything has the reasons to go bullish, right? This thing is clear. Now let's talk about that what can restrict this the bullish movement, and you know, these are things. The very first thing in the S&P 500 is you must consider is the previous, okay, this is the level that was 4185. Okay, so 4185, any upward movement, okay, yes, at first, okay, let's discuss that what is expected to happen on Monday. As of now, because of the closing of this candle, it is not clear that whether there will be a gap up open or a gap down open on Monday. Okay, however, kind of a spindle it is there. This means that on Monday we can expect, okay, either a flat open, okay, a flat open, or it can show that it is trying to come down a bit, okay, but it will be able to hold itself, okay, above 4125 or 4127, approximately 4125, let's say 4125. Okay, and one more thing, that as long as it is holding above 4100 and 4110, it will remain in the short term bull trend. Clear? Now let's say that irrespective of any open, okay, or after initial movement, okay, it is trying to move up. At first, it will first it has to struggle around 4155. Okay, when I say 4155, I mean 4150 to 4160. Okay, because on Friday it moved up, it failed, okay, and it came down, right? So it is expected to, you know, struggle, okay, again a bit, and if it fails to close above 4160 or 4155, especially 4155 or 4160 on Monday, then that can be problematic to the entire US stock market. The thing is that intraday, I am not saying that it cannot breach. It can breach, and it can move up to 4185, 4190. Not a problem. Okay, but the problem will be there if it fails to close above. Then that will be the problem, and that will be the only problem. because if it fails to close above this the level, in that case there will be a signal, through the daily chart, as well as primarily, yes, not as well as, but primarily on the weekly chart, that the S&P 500 try to breach the boundary of the Ichimoku, try to sustain above the Ichimoku on the weekly chart, but failed. Okay, that can actually trigger some selling to what? Some selling to the back to 4100 or 4110. Okay, so it will all depend, okay, whether it is able to sustain or not. But again, as long as it is holding above, sustaining above 4100, 4110, it will remain in the short term bull trend. And also as long as the Dow Jones is holding above 33585, number is 33585, as long as Dow Jones is holding above 33585, it will remain in the means the entire US stock market will remain in the long term, sorry, not in the short term bull trend, right? Now the question is that what happens if it breaches the 4155 or 4160? The next level that will be there in the picture will be 4185, and the previous high of the candle, that was 4195. 4195, that is the next hurdle. Okay, now after breaching, closing or sustaining above 4160, it has to deal with the 4185, 4195. 4195, that was the previous high. Okay, so now it will try to breach the 4195. If it is able to see, when I say breach, okay, it is not just the breach, it means the close. A close must be there. Okay, for example, on this day, on Wednesday, what happened is that we knew that if it fails to breach and close, or close above, or if not close, then if it fails to sustain above 4133, then it will come down, and exactly that has happened, and it came down intraday. Okay, this is what I mentioned to my YouTube community members on the Wednesday, that this will happen, okay, if this condition is there. Exactly, that was there. Similarly, what I'm trying to say here, that a close or a sustain means for 1 hour, 2 hours, 3 hours, if it is sustaining above, even if it closes below, but if it was able to sustain above for 2 hours, 3 hours or so, in that case it is a clear indication that now it has a potential, it can breach and it can move up, right? Similarly, what was there? It was there on Thursday, that the S&P 500, it moved up, it closed at 4146, but it was able to sustain above 4133 for 2 or 3 hours. That is why it was clear that now even if it closes below 4133, then also the next day the S&P 500 will be able to move up, right? So always look for the sustain, that it must sustain and breach. And I remember that someone has mentioned that okay, for example, okay, I mentioned this is the level 4100, okay, 4100. Then do not think that 4110 is the exact level. Yes, okay, most of the time, okay, it is, because my levels, my support and resistance levels are accurate to the decimal point, right? But sometimes it happens, okay, sometimes it doesn't. This means that if I have said 4100, this does not mean that you stick to exact 4100. Okay, you should give it some room, like plus minus 2 points, okay, plus minus 5 points, okay, 4 points, 3 points, something. Okay, give it a little room. So remember this thing. Okay, now yes, we were talking about what? We were talking about 4195. Yeah, so 4195, okay, it will be there in the picture, and a hit, okay, breach, that it must sustain. See, closing is a different thing, closing is a second thing, but it must sustain for 2 hours, 3 hours. Okay, at first it has to sustain above 4160. Okay, that is clear. Once it did, so 4155 and 4160, okay, once it's there, once it sustains above, in that case, okay, irrespective of the closing, then we can say that the next day or the next to next day, okay, it will further move up to 4185, 4195. Now 4195, again the same condition, it must sustain or close. If not close, but if not close, then it must sustain for 2 or 3 hours or so, okay, above 4195. Okay, now the very first time, okay, we can say, or that the S&P 500 can give up, it will give up, okay, from this level itself, from 4195 or 4185 itself. Okay, and also it can give up from the 4155, 4165, 4160 itself. If on Monday it fails to sustain and close above, see, this time it is not about sustaining. This time it is about closing, because it moved up, it breached the 4160. This means that this time it should close above the 4160, okay, or 4155 or 4160. If on Monday, if it fails to close above 4160, 4155, in that case there will be, okay, this is the situation that on Tuesday we can anticipate, okay, some kind of fall, okay, or a little, this is the bearish movement, okay, in the entire stock market, okay. But again, 4100, 4110 is there in the picture to hold, okay, any kind of fall. Then if it is able to, okay, yes, and then once again, okay, on Tuesday it can once again, okay, try. Now comes the sustain and close over 4195 and 4185, 4195. Once that happens, then it will move towards 4227, 4227 or 4225. Then it will move towards, okay, this particular number. Okay. Now in the next week, it because this week it closed at 4137. So from 4137 to 4227, it will be like 2% movement. 2% is fine. Yes, 2% is okay. It can be, it means easily. Okay, it can achieve easily. 4260, 3%. It will be around 3%. 4260, 4265, and 4291 will be around what? 4291 will be approximately 4%. 4%, no. Next week, 4% is we are not anticipating a 4%. Okay, 2% is fine. 2% to 3% is okay, not a problem. Means around 4227, yes, it can fairly, okay, it can. Then 4250, approximately 4250, 4255, okay, that's it. Okay, that is what we can anticipate. And if we look into the historical movement, then the 4227 was again, okay, this is a critical resistance or a very heavy resistance. So this means that at first we can see that the S&P 500 is okay, it is simply losing its time, okay, in order to sustain and close above these heavy resistances. Okay, the only thing that can drive the S&P 500 to 4291 towards the 4291, 4305 in the next week, okay, will be only and only if there comes, okay, some kind of manipulation. Otherwise that much is not possible. Now you might want to ask a question that if I mention that there is the short-term bullish trend, nothing is going to stop the US stock market to go into or to move into short-term bullish trend, then why I am not saying, or why I am saying that whatever happens towards the 4290, 4305, okay, why means why it will be manipulated, okay, this much of movement. The reason is that the technicals are supporting the short-term bullish trend, fine, okay. Even on the lower level chart, they are supporting the short-term bullish trend. Okay, the economic data is also supporting the short-term bullish trend. But the problem is that if there comes heavy candles, then within 2 to 3 days, the technicals will become saturated. Okay, now because the technicals are saturated, it will indicate a fall. It will indicate a fall from 4227 itself. Okay, that is why I am saying that a normal bullish movement is acceptable. Not just acceptable, but it is there in the picture, and we are expecting this the normal bullish movement, okay, there in this the picture. However, the only problem, okay, it comes when it is manipulated, okay. And see, the reason, if there comes a manipulation, okay, a bullish manipulation, and the reason why there will be the manipulation, it will be only and only if the market movers and the market manipulators think that they might not get chance in the next week, and that they should hurry, in order to push the stock market, okay, heavily towards 4300. Okay, then that will be the factor. Okay, else I do not see, okay, any other reason. Otherwise, as of now, a short-term bullish trend, normal bull movement, okay, that is fine, and that is acceptable, and that should happen, okay, highly likely. And the bearish movement, okay, that is actually, or that will depend if the S&P 500 actually fails. If it fails to close above or to sustain above 4160 or 4155, so the bearish movement, as I mentioned earlier, the bearish movement can come if the S&P 500 fails on Monday and also on Tuesday to clear and to close above 4160. 4160 is the boundary of the Ichimoku cloud, and 4155 is the 50%, this is the Fibonacci level. Okay, so 4155, 4160, if the S&P 500 fails to close on Monday, then we can say, okay, no problem, okay, it was just one day, it can okay, it can try again. But yes, one more thing, that if it fails to close above 4155 or 4160 on Monday, in that case we need to see that how much fall is there on Monday. Okay, if the fall is very much limited, okay, just means a little, in that case we can see, or we can expect that yes, it will now try again on Tuesday. Okay, fine. If there comes very heavy fall, some good fall on Monday, in that case we can say that now the chances of seeing that it is again going to try, okay, on Tuesday are less. Rather, it can come and retest the 4100 and 4110, right? This will be there. Now in the first case, if there comes a normal drop, okay, when there comes a failure, we are talking about the failure. If there comes a normal drop, okay, when there comes this a failure, in that case on Tuesday, okay, we will again wait for it to see if it is able to close above 4155 or 4160. If it again fails, in that case, that is something serious. That is not good. That is not good. Okay, because in that case, the sentiments will turn. The sentiments will see, not just the sentiments. Okay, forget about the sentiments, but the lower level, but the technicals on the lower level charts will turn bearish, and those technicals on the lower level charts, okay, they might force the S&P 500 to give, okay, this a downward movement even below 4100. But whenever the S&P 500 comes below 4100, then we need to move into the Dow Jones. We need to look into what is happening in the Dow Jones, whether the Dow Jones is holding above 33585 or not. If the Dow Jones is holding above 33585, then it's good. Even if the S&P 500 is coming down, coming below 4100, then also it is good. Okay, it can still hold. Okay, in that case we need to look into these, the numbers of the moving averages, because in that case the moving averages will hold the downward movement. Now it failed, it came down. Okay, now it has breached the 4100 and it closed below the 4100. That is bad. That is bad, because a closing below 4100 can force the Dow Jones to breach the 33585 level. Okay, now when that happens, in that case the S&P 500 will further come down. In that case, the next support level will be at 4065, because earlier we have seen that the 4065 has provided very good support to the S&P 500. This time again the 4065, okay, it will provide some good support, and at the same time, whenever, okay, it comes down in next 2 to 3 days, then the moving averages will also reach to these the levels. This means that it will get the dual support from the moving averages as well as through these the levels, right? Then comes, if there comes, like very heavy selling, in that case this will okay, it will further come down to 4035 zone and towards this the, okay, this the Ichimoku cloud. Okay, as soon as we see that there are 2 consecutive closings below the 4100, okay, or below, like these are 2 moving averages, or below 4065, it will turn bearish. Then the condition now that we were talking about, that when it is going to turn bearish, okay, then that is when it is expected to turn bearish. It will lose its short-term bullish trend, it will turn bearish. Okay, but the exact number will be seen, okay, only when the S&P 500 is in the session. And once again, if you are my YouTube community member, okay, then through the daily updates, okay, the daily analysis, I will tell you, okay, when exactly, okay, we can expect, okay, this kind of movement, right? Now there is one more thing, okay, that you must consider, that if the S&P 500 is able to hold and sustain above 4155 and 4160, close above 4155, 4160, in that case this will become the new support, right? In that case this will become a new support, and not just new support but a good support. And then a breach and close above 4195 means, yes, now that is another good support. Then from we can say like 4195 to 4160 will be, or will act as a very strong support zone. Okay, so when that happens, it breaches and closes above these, okay, then these will act as very strong support levels, and any fall thereafter will be restricted to these levels. And if you want to get the daily updates and the analysis of the S&P 500 from Monday through Friday, then you can join my YouTube community. And I've given the link in the description of the video and in the comment section. So guys, on that, the FOMC part, okay, or this the recession part, okay, I will wait for your comments, and let's see what you are thinking about this, the potential recession, okay, and the Federal Reserve, and whether the Federal Reserve, they are right, whether the projections of the Federal Reserve are right. And other than that, guys, if you are looking for the 30% returns where I take full responsibility, then you can visit my website. I have given the link in the description of the video and also in the comment section. You can read the terms and conditions, and if you have any questions or if you want to participate, then you can send me the email. So if you have liked this video, then hit like, and if you have any questions, then please feel free to comment. And once again, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. So guys, this was my S&P 500 weekly technical analysis for the week of April 17th, 2023. That is from April 17th, which is Monday, through April 21st, that is Friday.